In a world of information overload, in a world dominated by biased pay-to-play advertorials, in a world riddled with fraudsters, fakes, and phonies, one voice stands out to provide reliable information to investors, business owners, and busy professionals, unbiased and beholden to no one. This is Financial Poise Radio, the spoken word sister of financialpoise.com, the internet's most trustworthy resource about finance, investing, business, and law.
Hello, everyone. Welcome to Financial Poise Radio. I am Christopher Cahill. Later, we'll be speaking with a numismatist, Bruce Walker of Stack's Bowers Galleries of San Jose. What is a numismatist, you say? It's all about coins. Coins, baby, rare coins. Hoards of rare coins. Hoards being a principal source of rare coins because that is where rare coins were collected and buried and then more recently found. In an earlier episode of this program, we had on Ilya Zlobin. This would be episode 22. He too, a numismatist. You can compare the two episodes together by going to the website and looking for the earlier episode as well. On accreditedinvestormarkets.com, Alicia Purdy wrote an article called Show Me the Money, a look at investing in rare coins. So about rare coins, well, they're not as sexy as fintech. Fintech, we have been told for the last couple of years, is huge and getting huger. Specifically, marketplace lending or peer-to-peer lending is huge and getting huger. Lending Club, one of the principal, if not the principal, marketplace lender, huge and getting huger. It certainly had a huge IPO back on December 11, 2014. The Lending Club IPO surged to 56% greater than the opening price on that first day. And the valuation of Lending Club at that point was about $8.56 billion. Now, Lending Club is trading for a good deal less, and its marketplace capitalization is $1.56 billion, apparently about 1/4 or less than the valuation was at the time of the IPO. And if you Google Lending Club today, you will find that the top story is likely to be about turmoil and scandal at the company, the departure on a sudden basis of its founder. Well, the fortunes of business, I guess. With 2020 hindsight, maybe the Lending Club IPO investor should have been putting its money into rare coins. Just words to the wise, or words of the wise, to consider when you invest in an industry that's being looked at with such great enthusiasm. Now I'd like to turn to Financial Poise, about which I would love you to have great enthusiasm. I certainly do. Financial Poise has 5 new columns. These are regular features, and I'd like to tell you about each one, and then we'll get to the interview. The first of the 5 is Alleged Frauds, Fakes, and Ponzi's. Alleged being in parentheses. It is written by Adam Hirsch, dedicated to exploring the who, what, where, when, why, and how of fraud litigation. And fraud litigation is the source of some of the best lawyer stories you're ever going to hear. After all, it is in fraud litigation or fraud prosecution that the wiliest of malefactors and all of their doings face the scrutiny of others. Second column is Get Financially Fit, and it's written by Michelle Gershfeld, who has been a guest on this show. Dedicated to the idea that your financial health starts with how successfully you manage your money. It's all about the cash at bottom. And I certainly know some turnaround experts who say the same thing about business entities that Ms. Gershfeld takes as her point of departure with regard to personal finance. The third of our columns is EBITDA and Other Scary Words. It's written by 3 people, Yesenia Cardona, William Ryan, and Charles Sadek. It's dedicated to the reality that if you do not understand your numbers in a business, then you do not understand your business. So the numbers aren't something to be avoided, of course. They really do represent at least an aspect of reality. And these aspects of reality have labels like EBITDA, which might seem like a scary word. And we had some fun on an earlier program talking about The Devil's Dictionary by Ambrose Bierce, which was not about finance, and how Jason Zweig of the Wall Street Journal wrote The Devil's Financial Dictionary, which is about finance and takes a wry and jaundiced eye on finance and what the words mean. Our offering in this regard at Financial Poise is EBITDA and other scary words, a lexicon, if you will, to help business people sort it all out. Fourth of our columns is Crowdfunding for Investors. It's written by David Friedman, who also has been a guest on this show, and Matt Nutting. Dave Friedman and Matt Nutting wrote the book, literally, about crowdfunding for non-accredited investors. And we also have a site dedicated to their work as it continues, which you can visit on financialpoise.com. Finally, the fifth of our new columns and regular columns is Life Cycle Management for Business Success. And it is written by Carrie Wiener Rosenblum, who will also be a guest on this program. That column is dedicated to the belief that success in business is meaningless without success at home. Well, hear, hear. In addition to the question of meaning, one might suppose that the insights that are helpful to success at home, which Ms. Rosenblum explores, are also useful in any collective endeavor like a business. I guess my overall point about these columns is that they go well beyond whether or not you should have invested in Lending Club or rare coins or what you should invest in tomorrow. Financial poise as a concept rests upon more than how well you play the market. And we hope that these columns help you in those regards. Let's get to the interview. We're speaking with Bruce Walker. Bruce Walker joined with Stack's Bowers Galleries in early 2015 as a World Numismatist and Cataloger. This episode, you must know, has to do with coins. Stack's Bowers Galleries are located in Santa Ana, where Bruce works, New York, Hong Kong, Paris, and New Hampshire, a hotbed of coins. After a number of years pursuing numismatics while employed in the information technology field, Bruce began a gradual transformation toward a career as a professional numismatist. In 2013, as his passion for working with coins continued to grow, he left IBM after 25 years to pursue his dream job of working with rare coins on a daily basis. We are fortunate to have here a very knowledgeable and enthusiastic person when it comes to the subject matter. Welcome to the show, Bruce.
Well, thank you, Chris. Glad to be here.
Many of us are familiar with the term or the phrase, rich as Croesus. Croesus was the potentate, the king or emperor of the Lydian Empire, born 595 BCE, died 546 BCE. So he might have been rich, but he didn't make 50. And the Lydian Empire was in the present western part of Turkey. But anyway, Croesus was credited with issuing the first gold coins with a standardized weight and purity for general circulation. I know this because I read Wikipedia, which is faultless on such matters, I'm sure. Bruce?
Yes.
Please tell us about Lydia as the birthplace of coins.
Well, much like you just described, it's in Western Turkey, and the coinage that first began there in the 6th, 7th century BC was struck from electrum, which is an amalgam of gold and silver, primarily gold, and pretty much started a revolution worldwide in terms of on a monetary basis. Prior to that, it was primarily barter. With the introduction of coinage, it is now possible to not only accumulate wealth, but also to easily transport that wealth in the form of coinage, which was very difficult prior to its introduction. Clearly, it's easier to transport coinage than it is to move a herd of livestock from point A to point B, and for that reason, it had a great deal of utility from the very start, and the concept of coinage spread pretty quickly from that.
I'd have to say, Bruce, not to interrupt your flow, although obviously I am, that coinage was a disruptive technology, we would probably say today, when it comes to exchange in trade.
Yes, that's a fair assessment, I would say. Very accurate, yes.
So, but coins, I mean, they're physical things. If you needed to buy something very expensive, you needed to accumulate a great number of these things called coins. How did that sort of play out?
Well, I think not unlike monetary transactions today, there would have had to been at that time people who generally had greater incomes than others, and under those circumstances, they're able to form hoards or to accumulate wealth. And many of these hoards, not just from Lydia, but from other parts of the world, early centuries BC at the beginning of coinage, are still being discovered today. In many instances, it's thought that they were originally created or originally formed based on a perceived threat, external threat by the person in possession of the coinage. He had to know about the threat prior to any kind of invasion, where he had a chance to bury the coinage, and then subsequently through invasion or for whatever reason not being able to retrieve the coinage, it's been left to be discovered today. And that's been repeated all over the world. There's still being hoards discovered in Celtic coinage in Britain and in other parts of the world that continue to shed lights on the same accumulation of coinage back in the ancient times, where obviously there was a certain amount of prosperity, and that was reflected in the ability to accumulate coinage.
I like the word hoard. I like the way it sounds, Hoard, in case I wasn't clear already. As a noun, it refers almost exclusively to what you were describing, that is, a collection of wealth that was ferreted away or dug away and hidden or protected. As a verb, it has a broader meaning, covering some pathological behavior or compulsive behavior that people engage in. But I still love the word. You still talk about people literally hoarding their wealth. But coin collecting is not coin hoarding, it's collecting. How do you distinguish hoarding from collecting? Obviously they're different, but I'd like you to talk about it if you would.
Well, much like you just observed about being a certain amount of compulsion or obsessive behavior in forming hoards, probably the biggest difference is a collection is formed based on a preconceived plan of what's going to be acquired versus accumulating coins without much discrimination about what's being accumulated. Generally, for a hoard, somebody who's adding to a hoard, there's satisfaction in making additional acquisitions that are added to the hoard, but there's very little satisfaction in the ownership of the hoard itself. It's not unlike somebody who's hoarding shoes who doesn't really get any satisfaction out of what's in the closet already. The only satisfaction comes from acquiring another pair of shoes. Same sort of, I think, psychological phenomenon applies to the coin hoards, whereas a collection has a set of parameters, if you will, some sort of guiding principle that makes certain coins desirable and on a list that are to be acquired and others that aren't. And it's from this structure that really makes the two totally different animals. In large measure, that means that the collection itself can be, I think, far more appreciated and enjoyed by a collector than if it were simply a disorganized hoard of coins, because there's a great deal of effort and planning that went into acquiring the pieces.
You know, I like we're starting with this because we're going to get to the monetary, the value aspects of investing, let's say, in coins. But let's talk about the sources of satisfaction for what's, in some degree, a hobby for many collectors. What are the things that make them happy about doing this? What are the maybe not so obvious things that make coin collectors happy?
Well, there's definitely the joy of participation in the hobby. I think a sense of fulfillment from successfully being a steward of a collection and properly conserving it. And I think in a broader sense, there's kind of a social aspect to it that involves friendships, many of them lifelong, that are developed pursuing the hobby, both through clubs and through volunteerism as well. Most of the collecting community, if you will, is centered around coin shows that have a lot of other ancillary activity going on with them, including auctions, which is the business that we happen to be in. And there's almost kind of a fabric there, a social fabric that goes along with that. And there's the opportunity to meet a lot of people who share the same interests. There are luminaries and there are leaders and there are eccentrics and there are some people who are a little bit more academic about their approach to numismatics. And it's difficult to really quantify that monetarily, but without question, it's one of the big dividends of being involved in the hobby, no matter at what level a person is capable of pursuing it from a financial side of it.
Well, I mean, we're talking with a man who left his wife, so to speak. You have a wife, you're happily married, but rather left IBM, to whom you were married for 25 years in order to pursue your dream of being with coins. So could you comment briefly on which coins you particularly treasure that you have or seek? What coins bewitch you?
Well, most of my focus has been on a handful of countries: Italy, Albania, which most of their coins are struck at the Rome Mint, designed by Giuseppe Romagnoli, who was probably one of the greatest die sinkers of the early 20th century.
What's a die sinker?
Somebody who designs coins, basically. A lot of people are probably familiar with Augustus St. Gaudens here in the United States as having designed some of our coinage, and basically he designed coins. Mm-hmm. And much like looking at a particular type of artwork, a Van Gogh or a Degas, just, typically you can walk into a museum and you can recognize their work from across the room without having to see the placard next to it. In the same way, a lot of coin designers share those similar ability to convey their authorship, if you will, of a coin design just simply by looking at. You can recognize works by specific individuals.
So that's the aesthetical dimension, but there's a historical one, isn't there, for many collectors?
Yes, there's a whole bunch of different angles on that. There's the historical part that deals with the people who are on the coins, the rulers. There's the economic part of the history, that types of activities that were going on when the coinage was struck, gold rushes. There's all sorts of different, really almost countless different historical associations that go with the coinage that in the past has been issued that we collect today.
Well, now let's shift then from the aesthetic and historical to the investment type of interest one might have in coins. This is a show that, we invite accredited investors to listen to us. We try to market to them and try to increase their wealth of knowledge about wealth. And coin collecting, like wine collecting or any other kind of collecting, is a form of investment in alternative assets in addition to anything else it might bring somebody. And I guess when I'm thinking of coins and collecting as far as an investment, I'm reminded of stamps. And here's why. When I was a boy, I'm not sure how old you are, maybe when you were a boy, coins were used for money. Money was physical. We knew there was non-physical money, but money was physical. Stamps were used to mail letters. There were lots of stamps. Well, there's a diminishing number of stamps being used because of the prevalence of email and other forms of electronic communication. And it seems like something similar is happening to coins. Maybe I'm wrong. But the idea that there will be less of it in the future must have some impact on the nature of coins as an investment. Would you mind comment on the investment perspective toward coins?
There's definitely been some reduction in the utility of coinage in general commerce. I don't think there's any question of that. I think in the bigger scheme of things, in terms of the collecting world that serious collectors are involved in, it really doesn't have that much of an impact on it. Really, probably the more important aspects of it are, for a collector, is to have that spark or fascination with collecting coins that leads a person to seek more knowledge about them. And basically, the more you know about a particular coin, the better chances you have of selecting the right examples and ultimately down the road perhaps profiting from it.
Well, okay, let's say you have $50,000 and you're inclined to put them into coins. All right, what's the difference between investing that $50,000 in coins and investing them in, say, public equities or bonds that are traded on exchanges?
Probably the biggest difference is that coins are considered a tangible asset, which are completely free of any counterparty risk. When they show up in your safe deposit box, there's no chance when you go back that they're going to vaporize and vanish because of counterparty risk. They never show up on anybody else's balance sheet as a liability, unlike a stock or a bond or even a treasury for that matter. They're as pure play on a tangible asset investing as you can probably get. So that's probably the main difference right off the bat. And for many investors who are inclined maybe to diversify, it definitely is one of the more attractive traits of adding numismatics to a portfolio would be that diversification. That includes the absence of counterparty risk.
But there's some absence of noise, isn't there? I mean, regulatory noise, reporting, so on. What it takes in terms of pushing paper to invest in coins.
It's actually a fairly unregulated market. Since the Patriot Act was passed after 9/11, there are some reporting requirements having to do with money laundering and terrorism and that sort of thing. But by and large, there's none of the paperwork that you'd see like for reports that were necessary for the SEC for an incorporated company and that sort of thing. Even 1099s aren't necessary for transactions. For transactions over $10,000, the banks themselves take care of all that. So there's really not much in the way of paperwork that you have to deal with. It's vital to keep records of what you've purchased, but beyond that, there's really no external requirement that you have to leap over. There's no hurdles that you have to deal with in terms of regulations. That same absence of regulation also applies to consumer protection. There's some basic FTC protections, but by and large, if a deal goes bad, there's a chance of litigation. Accredited investors being reasonably familiar with unregulated markets and understanding that the returns in unregulated markets are generally far better than in regulated markets, provided that due diligence is done, if the homework has been done to determine who to deal with and what to actually buy, the chances of succeeding are improved dramatically. For that reason, it should remain an attractive option for accredited investors from that perspective as well.
Okay. Well, before going back to due diligence in some more detail, because that's really key to investing in coins, I gather, coins do lose value sometimes, don't they, or do they?
There are times when the entire market corrects, not unlike equities, really. In 1980, after a huge run-up in gold and silver prices, there's a correction in the metals that ultimately affected the coin market as well. Similar thing happened in 1990. There's a great deal of speculation after the grading services were first introduced in the late 80s that led to probably over-participation, I guess would be a good way to describe it. Then there are other corrections that just simply have to do with currency exchange rates. Russia is a very good example of that. Following the fall of communism in the early 90s in Russia, the value of much of the coinage there, the imperial coinage, Tsarist-era coinage, became much, much more valuable, many times more valuable. And there was a large run-up in the price of even circulated and damaged coins that kind of came to a head in 2008 as oil crested at $150 a barrel. And that market has softened considerably since 2008. Still much higher than it was in 1991 when the Soviet Union collapsed. But if anybody who had gotten in at the height of the mania in 2008, yes, they'd be sitting on probably an unrealized loss right now if they hadn't sold the coins. But there are other coins that lose value because of hoards being discovered. There's a good example of that's the 1903 New Orleans Morgan dollar that at one time was a very scarce coin until a hoard was released by the Treasury Department in the early 60s. And interestingly enough, sometimes when hoards are released, the exact opposite happens. We had a huge hoard of gold double eagles from the SS Central America recovered from the bottom of the Atlantic that greatly increased the number of 1857 S double eagles that were available to collectors. But the interesting thing about that was the prices not only held up, they actually increased based on increased awareness of the story behind the coins that were coming to market, and which led to people wanting examples of it. And a lot of different factors go into pricing things. Probably the three main things to think about is the rarity of a coin, the condition of the coin, and the amount of demand for the coin. That last item is probably far and away the most important.
Before we get to that, I wanted to pick up on something you said earlier about metals prices affecting the value of coins. I assume it's not a one-to-one relationship. How closely do the prices of precious metals that coins are made out of track the value of especially older coins?
On the more desirable material, there's almost no correlation. The more common material, they can get very close, within a few percent. There's generally what we call generic gold from the 19th century, both U.S. and foreign, that basically trades as a bullion item at perhaps 1 or 2% above the actual gold content. And so obviously those coins are greatly affected by any variation in the price of precious metals. Many investors in gold bullion, myself included, originally started by buying these types of coins that offered a little variety, didn't have to have all the gold in the same design, and they're available for a couple of percent above melt. And eventually, most collectors, myself included, will see something that's very, very appealing that is considerably worth more than melt. And once you've crossed that line, it's pretty easy to move on into collecting and become serious about acquiring pieces that have far more value associated with the rarity and the state of preservation of the coin and the story that goes with the coin than simply the gold content that's in them.
I do recall way back when, the very beginning of the Reagan administration, there was a very intellectual young man whose girlfriend listened to him when he said there's going to be great inflation. Why not buy some silver? And she did. Eventually, the dollar strengthened so much during the Reagan administration, and gold and silver prices collapsed so much that she just kept this silver in her refrigerator. I mean, it wasn't even worth worrying too much about its fate. It was only worth a few $100s instead of being worth many thousands. So I guess the price of metal in that case, a little bit volatile and unpredictable. But when it comes to coins themselves, coins as coins, not as bullion, you were starting to talk about the elements of due diligence, and I think they're important for anybody who's actually going to enter this game. So I was hoping you would talk a little bit more about that.
There's basically two types of due diligence when it comes to the coins that a collector would be considering acquiring. The first has to do with the coins themselves. It's necessary to research the history of the coin based on its type and its date and other characteristics, where it was minted. And you can determine a price history based on those things. Other aspects that come into play are the provenance of the coin. In other words, who has owned it previously, if it's been in any prominent collections. There's other things to consider, the rarity, both absolute.
Or I'm sorry, when you talk about provenance, maybe one element of provenance is whether it was at the bottom of the sea in the SS Central America. That kind of prison
exactly.
can really help value, I take it.
Yes. In particular, the names of particular collectors from the 19th century that most of the coins today that are extremely valuable, at least U.S. coins, can be traced almost back to the day they were minted, going all the way back to the 18th century on some of the coins. And all that can be looked at, and it definitely figures into how desirable a coin is. There's also rarity versus the absolute rarity of a coin versus the relative rarity of the coin based on condition. There are some coins that are fairly available in the circulated grades that become what are considered condition rarities in the higher grades, where it's nearly impossible to find them in mint state. And all that can be found on different databases that are out there, primarily databases that are run by the grading services in particular, and also by the auction houses as well. That on the price side of things, auction houses generally have archives available that you can trace back different coins in different grades and see what they've been trading for. You can make some deductions and make some conclusions about trend on coinage just based on some of those things.
This leads to a question, because you're talking about many different factors: provenance, price history, grading, and then you talk about available sources and auction houses and grading services that are available on the web, I take it. So could a gentleman numismatist do pretty well with his or her, if it's a lady numismatist, $50,000, as an accredited investor, that's significant, but not a catastrophic loss if you lose it. So could an amateur do pretty well with a $50,000 thing? But if you were investing $1 million, you might want to step up your due diligence game by hiring some kind of professional?
Well, you definitely would want to have professionals involved in any capacity, really. You have to have some sort of trusted advisor that can steer you in the right direction, particularly early on as you, I guess, learn the ropes of the hobby. There's a great deal of information that once you're familiar with seems almost second nature, but to somebody new to the hobby, it's all kind of...
You were seduced over a period of decades, so a lot of this is second nature to you. But I guess
Yes,
somebody walking
but
in is like a kid at a carnival to introduce
right.
another personal story in which I won't name myself. Getting fleeced for $5, some game of chance, of alleged chance that I can counter, taught me a valuable lesson. But similarly, one going into numismatics must go in with eyes wide open.
Yes, it's definitely beneficial to be eyes wide open, if for no other reason than to absorb as much information as possible. There's a great deal of nomenclature alone, just the kind of the lingo of the hobby that needs to be absorbed early on to be able to have a understandable conversation with a dealer or an advisor on what you're pursuing. Some of those things include grading. There's a grading scale that is generally accepted that runs from 0 to 70, called the Sheldon scale. Basically, coins graded 60 to 70 are all mint state, and they'll assign a grade like mint state 60 or mint state 61. As you climb the scale, the coins become nicer, generally less available, generally more, in all cases, more valuable the nicer they are. And of course, descending the scale, they become more worn all the way down to poor 1, which is the lowest grade, which basically there's nothing left of the coin, just enough to attribute the coin for type, and that's it. Sometimes not even able to read the date. And generally, at the investment level, if somebody's willing to, sink a considerable amount of money into coins, you definitely want to be pursuing fewer coins that are perhaps more expensive, but generally in the higher grades. For some coins, the best or the finest known example is still a circulated example. But in most cases, there are uncirculated examples available of even the rarest coins, and generally speaking, the more sophisticated collector would be pursuing those types of coins, the higher graded coins.
It seems like you should buy the book before buying the coin, and that you should make sure you vet dealers and auctioneers with whom you're going to deal. I was wondering if you might deal with those in reverse order, how to vet, and then what kinds of information sources we should finish with that. You should at least be aware of.
Right. Yeah, that's a very good question. Selection of dealers or the due diligence on the side of dealers and auctioneers kind of goes back to that unregulated aspect of the hobby we were talking about a minute ago. There's a very low cost barrier to entry into the business. Essentially, all that's really required is a couple $100 to rent a table at a coin show, and you can call yourself a coin dealer. And it's when selecting a reputable dealer or auctioneer, it's a lot like deciding to build a house. In some areas, some localities, there's a great deal of regulation that helps to weed out the unqualified builder, and in other areas, there's very little regulation, where it just requires little more than a can of spray paint, a stencil to put your name on the side of a pickup truck, and you can call yourself a builder. I know in Kansas City, where I spent a number of years prior to moving out here to California, at one time about 20 years ago, they'd determined that there were a lot of problems with housing construction there that seemed to be much more prevalent on the Kansas side than the Missouri side. State line kind of runs down the middle of the metropolitan area there. And ultimately it was determined that a lot of those problems could be traced back to subcontractors who really didn't have the qualifications to be doing what they were out there doing.
How do you avoid that problem in this context?
In the context of coin collecting, most of it comes down to associating only with dealers and auction houses that are members of guilds and associations that are basically trade groups, if you will. The most prominent of them is the PNG, otherwise known as the Professional Numismatic Guild, and they have capital requirements for members to belong, a code of ethics and conduct. They have arbitration for any kind of disputes that any client of theirs might have, and of course they have ongoing monitoring of qualifications as well. Most of the members of the PNG are very, very proud to be affiliated with it. Nearly all of them can share stories about their history in the business that sets them apart from non-affiliated dealers, and definitely is something that you want to search out for if you're going to actively participate in a significant way in the hobby is to be dealing with these types of people.
And I suppose that if you have a taste for the coins, an aesthetic taste or historical taste, you're going to enjoy reviewing auction catalogs and other sources that might be available, and thereby improving your own due diligence capabilities so you can spot issues or potential issues with coins. Does Stack's Bowers Galleries put out any publications?
Yes, we do. We're one of the larger auction houses in the world, and we have a series of catalogs that are published basically every couple of months. We'll have a new auction that's coming to market somewhere in the world. We run 3 sales a year in Hong Kong on the world side, dozens of coin auctions on the U.S. side. And right now, at this time, we're, as chance would have it, closing in on one of the biggest sales that we've ever had, D. Brent Pogue collection.
Who was D. Brent Pogue?
Brent and Max Pogue are from Texas. They're real estate developers, and over the span of about not quite 40 years, they managed to build probably the greatest U.S. collection of coins ever assembled, many of them pedigreed or with provenances to past great collections from earlier in the 20th century, going all the way back to the 18th century, completely focused on U.S. coinage, examples of only the very best. And over that span of time, they acquired about 650 coins, which gives you some idea of how focused they were. They really weren't buying every coin that was presented to them. They were interested in specific coins and interested in the best. And definitely, probably the most successful way of collecting coins is to limit yourself to the best within the segment that you're going to focus on. In their case, they had the resources to pretty much address the entire range of U.S. coinage, and as a result, have assembled this collection that's just really second to none. There's a couple of coins that will be coming up for auction later in May at Stack's Bowers, and it's an auction in New York that's going to be run in association with Sotheby's there. And there are a couple of coins there we're expecting to close in on $10 million each. One an $1804 dollar, another an 1822 half eagle. The dollar is the finest of its type. There's only a handful of them in existence. The half eagle is one of 3, with the other 2 in the Smithsonian Institution. So it's essentially the only coin that's available for private ownership. And so coins like that definitely bring a lot of excitement to the hobby and generally bring out the more serious collectors to participate. Interestingly enough, not all the coins in the collection or in the sale, for instance, in May, are going to be multi-million-dollar coins. There'll be others that are finest known for their type, yet at lower price points that are available to collectors, or if you will, investors who are interested in getting into the hobby at a lower price point. Again, it's a matter of doing some research to figure out what's a reasonable price to pay, and for a collector who's, I guess, a little bit more advanced on their collection and closing in on completing a particular series or typeset, it's not uncommon to reach, I guess, beyond what they're originally planning on spending to acquire specific specimens, just to come a little bit closer to completing the collection.
Okay. Well, Bruce, I'd like to finish with the following question, since you brought up that impressive collection. Is a collection of 650 coins technically a hoard?
Not really. I guess it's not a hoard because there's so much focus and organization to it. A hoard has very little requirement for addition to it. Generally has to be gold or silver, whereas a collection has some very specific requirements. In the case of the Pogue collection, it had to be either the finest or tied for finest on most of the coins, or of such attractive appearance, regardless of grade, that it added to the prestige of the collection. So there's one of the bigger differences.
Well, okay. Bruce Walker, thank you for speaking with us about hoards and about coins and about collection and about how to protect yourself and about how to enjoy yourself as a collector of coins. Thanks again.
You bet.
That's Bruce Walker of Stack's Bowers Galleries, and Bruce operates in the Santa Ana Gallery of Stack's Bowers Galleries. You've been listening to Financial Poise Radio. Financial Poise Radio is produced by Stephanie Strait. I am Christopher Cahill. Let's do this again sometime soon.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.financialpoise.com. Each week, Financial Poise Radio brings you news and education about finance, investing, business, and law. To see a short written summary of this episode, go to www.financialpoise.com. Financial Poise Radio is a production of Financial Poise Radio Productions, LLC.